Hi everybody, rather I should say aloha. I'm coming at you from the big island of Hawaii where I've been pretty much all this week, and I think for the most part I picked a good week to go on vacation, although I do still keep trading and watching the markets, getting up at 3:30 a.m. Hawaii time, and the market closes at 10 a.m. Hawaii time, which is actually quite convenient because I have pretty much the rest of the day to do whatever I want. Usually that means looking at charts out by the pool or on the beach, but we do find time to do some other things. But in any case, kind of a funky market this week. Last week, as you can see on the NASDAQ composite chart here, try to make this a little bigger. We had a breakdown after we went to new highs, and this pattern has just pretty much been typical for the entire year. We had one good breakout in January. You can see here, you moved significantly higher, I'd say, or substantially higher, pulled back to the top of the breakout here and went higher again, made a new high. Now this is where we started this pattern of making new highs and breaking down and then pushing up to new highs and breaking down and pushing up to new highs and breaking down, pushing up to new highs and breaking down. And finally, a couple of weeks ago, I think last 2 Mondays ago, the NASDAQ made an all-time high. And we broke down, and you'll notice that it seems to pull back into this black 65-day exponential line every time. So it fakes everybody out by going through the 50-day and then comes back above it. In this case here, we had something that looked a lot uglier, and I think fooled a lot of people into thinking that we were going into a more severe market because this breakdown was different than the rest of them. But in this market, you have to expect the unexpected. Of course, we turn and we jack straight up to new highs, all-time highs on the NASDAQ. And then we come off hard. Last week was a decent week for shorting. This week has been a little more difficult, and I've been on vacation for the last 4 trading days here. So we bottomed out on Monday, gap down after several days down. That was a little bit of an oversold condition there. If I'm carrying anything short over the weekend on Monday morning, I'm generally covering into that because you come down significantly. A lot of stocks were already hitting some of my downside price targets on the short side. Now we've come back up 3 days of above average volume here, if you can see that. Let's see if I can make these a little bigger. Here we go. And you can see today we had this sort of outside reversal to the upside after heading down in the morning, then we turned back to the upside. Volume picked up relative to yesterday, and so you're in this confusing position where you've broken down. Now you're heading back up. Are you going to do the same thing and head back to a new high again, or are we finally going to get something more severe in terms of a correction? Because everything that we've had so far this year has been roughly 4 to 5% on the downside on the S&P or the NASDAQ, and then that's it, and everything turns around and gets happy again, and we head back to the upside, and that gets to be somewhat frustrating. We can see on the Russell, I think I've got the right, let's go, I think it's RUT. Here we go. The Russell index, though, has been weaker, and it didn't make a new high when the NASDAQ did. It actually found the resistance at this peak over here, and now it's come down. You sort of see a little, say, fractal head and shoulders forming here, but now it's starting to rally. But you can see that on Monday, the broader Russell 2000 provided the context for a bounce because you're at the 200-day moving average. And again, I was talking about being short and covering on Monday, and that was also not only because we were oversold at that point, but also because you were coming down to the 200-day moving average on the Russell, which is a broader index for small caps, and that sets up the context for a bounce. Okay, so we can see in this case, if we go look at some of these other charts, the S&P, same thing with the S&P, came right down to the 200-day, setting up the context for a bounce on Monday. And I think the S&P has been helped along by oils, which have been trying to come up off their lows. And then, of course, we have the New York Composite, which is what I've been tracking. We can see that on this day, on this particular day, if we line this up, let's see here. We'll go back to the NASDAQ here. And if we line this up more or less with, whoops, losing it here. Here we go. We can see that the NASDAQ went to a new high roughly at the same time that the New York Composite ran right into the 50-day. So there was this massive divergence in my view where you had the broader market was lagging severely, and you can see this series of lower highs and lower lows so far. But now we retest these lows along here on the New York Composite. We rally up to the 200-day. Now you're at a point where you're setting up the context, at least in terms of the broader market, for a pullback. So I think the market's at a critical juncture here. If we see if this rolls off the 200-day, then you'll probably see the NASDAQ and the S&P break down below their 50-day moving averages. Now notice today we had the context for the reversal off of the lows today after we opened down pretty hard this morning, and that was because the S&P and the NASDAQ both found support at their 50-day moving averages. That's the higher line here, the blue line. So you can see there's sort of this bizarre divergent market here, and it makes it very tough to navigate. But when you look at individual stocks, there aren't a lot of things that look what I would call juicy on the upside. And there are a lot of patterns that are starting to break down and looking pretty ugly. So let's, we're going to get rid of these actually. And so we get a sense of what the market's doing. So you see we're in a kind of a critical juncture. If the broader market rolls over from here, and we'll see, I think you see the NASDAQ and the S&P break through their 50 days and head lower. Same thing with the Russell, probably busts through its 200-day and comes off. As far as individual stocks go, we've got, I thought Facebook was interesting. I'm going to go through some of the names on my screen. This is what I use when I'm traveling, this little setup here. I got a couple charts over here. I don't know if you guys can see the GoToWebinar screen over here. But in any case, it's sort of blocking my view of stuff. But if we look at, let's go to a daily here. I got a weekly and a daily up here. So we're looking at a daily chart of Facebook. And after earnings yesterday, stock came down. This morning, it is traded as low as 92 and change, just above the 92 level, and found support on huge volume and turned back to the upside. Sort of a supporting type of pocket pivot off of the 20-day, but it didn't get above the 10-day line. So not really clear to me what this is going to do. I actually bought some of the stock this morning trying to catch a move back up off the lows, and it's moved up a little bit. There were a couple other stocks I tried doing the same thing with when my shorts all turned on me, and I was using a 620 intraday chart to signal to me when to cover my shorts if they turned back to the upside, and I'll get to that in a little bit here. But you can see with Facebook, for example, let's pull my little chart up here, my 5-minute. You can see that early in the morning you broke, no, actually that's not it. Here we go. Early in the morning you broke down, and you could have been shorted right off the opening here because they opened it up around, you get the right around what, 96, up near 96 it was opening up at, and then you broke down hard and you turned. So if you got short in here, you could have picked off a couple of points, and then you turn, you got a 620 buy signal, and that actually held throughout the day until the end of the day when it started to roll over an after hours trade. This is where we closed. So it is 7:49 p.m. right now in Hawaii, which corresponds to let me think if I can figure this out, 10, 11, 12, 1:49 on the East Coast and 10:49 Pacific time. So after hours we saw LinkedIn. I really feel sorry for the people who jumped on this like a bunch of morons. Here you see after hours they, I guess, beat on earnings, or looked like they beat on earnings, and then it didn't look like they beat on earnings. They ran all the way up above 260 after hours. Thing closed around 227, I think. And they ran it up above 260, and then the thing just comes straight down in after hours trade and ends up around, well, right now, as of the last trade, 216.16. So this may actually become shortable tomorrow. I'll be keeping an eye on this. And you see, again, you have this continual pattern of it rallying back into the 200-day, boom, 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 and then now you're going to open down somewhere just below the 50-day, down around in here. And so I think something to keep an eye on. It might become a short. It's below the 50-day, so if you open below the 50-day moving average, that's this line here, and you rally back up into the 50-day, that might be a short. So that's looking pretty grim, I think, after hours. Some other names I was looking at today that I actually took a shot at was GoPro. It came in down to the 10-day line here on very light volume, so at a voodoo volume signature, and you held tight. So I bought some after hours. I was actually sitting on the beach in, I think it's Kealakekua Bay over at Captain Cook, which is the southwestern part of the island, where Captain Cook was killed by the Hawaiians. Apparently what happened, he was actually revered by the Hawaiians, and apparently what happened is he cut himself on a rock on the beach there, and he started bleeding, and the Hawaiians, who had considered him to be a god, figured out that, hey, wait a minute, this guy bleeds. He's not a god, let's kill him. So I don't really like those two choices. Either you're a god or you get killed. But in any case, they killed him there, and there's a nice big monument that you can paddle out in a canoe if you want to rent them, a kayak rather, if you want to rent them and go out there. I didn't bother to do that, but it is a very beautiful and somewhat remote area. The drive down is pretty wild. For any of you who've done that, you know what I'm talking about. And if anybody has ever driven on the Hana Highway on Maui, I would say the road down was a little bit like that, with these steep embankments down the side, maybe dropping a couple hundred feet. Anyways, while I was there, I saw the stock trading up near 63, and I bought a bunch down here along the lows and just punted it while I was at the beach on my iPhone. So that was pretty handy. I think that's the first time I ever traded at the beach, at least at the beach in Hawaii. In any case, this is holding up, but my guess is if something's had this kind of a move, it may need to go higher, and it's really going to depend on what the market's doing. You can actually see, if we move this stuff over, I'm watching the futures here. I look at the minis. We're down 525 on the NASDAQ, and the S&P, the ES, is down 125 right now. I think China was down, opened up down about an hour or so ago. And so we'll just see what happens tomorrow. But it's just a difficult market, and it's hard to make progress in either direction. And it will throw you. You know, start making some progress, say, on the short side, and things flip around and head higher. I'll give you an example. Something I shorted yesterday was Gilead on earnings. I saw it rally up here, and it's right up into this area of resistance. So I went and shorted it, and it came down and broke down to the 50-day yesterday. And I covered it and took a couple 3 points out of it. And then today it started to come lower, and it turned on a 620 buy signal. So I just went right ahead and covered the position and got out of the way. I was also watching NXPI, which came out with earnings, and I guess it wasn't as bad as people thought it was going to be, and so the stock gapped up. But the reality is it had already been pretty well sold off. As you know from I guess maybe 3 or 4 weeks ago in the webinars, if you check them, we were talking about this as a short right at the 50-day moving average, and it did break down. And it comes right down to the 200-day, bounces off once. So you could have gotten one more short out of it for a few bucks, and it bounced off again. Notice the retest here was a little bit of a Wyckofian retest, so a low volume sort of thing, and then it bounces right back up off of the 200-day moving average, and now it's heading to the 50-day. I did short it today, and it started to come off, and then on my 620, around 95 bucks. I think it started to hit, I shorted around 97, somewhere around there early on in the day, right at the open. And it started to come down and got just above 94, and then turned around, and right about 95, it turned on the 620. And so I bailed out and trying to see if I can find that. I know it's, here we go. Let me take a look at this so you can see what happened. Go back to, let's see, where are we? Actually shorted because it looked like it was getting a little bit extended on the 620 early at the opening right here, and so got it off right about in here just as it opened up, and it came down. We got the cross, and then immediately, well, I'm not going to say immediately, but about an hour and a half later it turned, and you got to cross back to the upside, so time to get out of the way, take your $2 and say thank you very much. And the stock continued to rally throughout the day. Now at this point I'll probably be watching to see if it hits the 50-day and runs out of gas. But that's pretty good volume today. I wouldn't call it a pocket pivot, obviously, because you've got this big downside bar, but it did get some support off the 200-day. Now, of course, the cousin stock, and there are a few cousins to NXPI, Skyworks, of course, which was a short up in here on the reversal, and you broke down, you undercut this low, so that sets up the potential for an undercut rally sort of situation. And really what you get is a little rally, and it's sort of a bear flag, but it may make it a little higher, and so I'd be watching this on the way up to see if you get some sort of a shortable rally where it runs out of gas on the upside. And I would expect that eventually it gets down. It could potentially get down to the 200-day moving average. That really depends on what the market's doing. Another cousin stock is Corvo, Jose, good old Jose. He got his bell rung today, big time. Gap down. I think the company guided lower. They didn't come out with earnings just yet. But it was already a short. You can see the breakdown. Here's the cup with handle breakout, and it fails. Okay, so through the 20-day, you see the breakout fail, and then through the 20-day. For anybody who's been reading the new short selling book, I talk about the 20 days being very critical as a point of resistance once you start to break down. So you can see here you have the cup with the handle. Here's your cup. Here's your handle. And you break out here and you fail immediately. You break down to the 50-day and you rally right up to the 20-day exponential moving average. That's the green line right there. And then you break down again, and this becomes shortable here or on the rally back up into the 50-day here for anybody who's able to hit that one if you're paying attention. So, but that was breaking down along with Skyworks Solutions, along with NXPI, and I believe Avago Technologies is another one of the cousins. And you notice they all are similar in the sense that they've all had breakouts that have failed. So here's a breakout here, and this fails. Okay, and again, what do we see? The breakout fails here, breaks down through the 20-day moving average here, and bounces off 50 and then rallies back up to the 20-day, which also coincides with the 10-day. But I don't really use the 10-day in short selling because I just don't. I find the 20-day is much more relevant. The 20-day is fast, but not too fast. The 10-day is way too fast, I think, and that's generally a problem, or at least found it to be a problem. I think once something starts getting some velocity on the downside, you can always use the 10-day as a trailing stop in the same way that we might use the 10-day moving average as a trailing stop when something's streaking to the upside. And you can see almost in textbook fashion, okay, we break down. The breakout fails first here. We bounce off the 50-day, run into the 20-day. Then we bust through the 50-day. And then you get this kind of weak, you see the wedging sort of action, low volume on this rally up into the 50-day, and then you break down. And good for a few points. Maybe it eventually heads for the 200-day moving average. Some people ask, why don't we put out any short selling reports, or I forget what we call it, SSS's, short sale setup reports. And that's mainly because we can't necessarily agree on something that's thematic as a short. In other words, something that probably is going to have some long-term downside. And the market's very choppy, so you don't really get any significant trends on the downside that are really playable. Most everything on the short side that I've been playing has been tactical in nature, mostly. You've had some stocks that have broken down from some nice patterns and have been breaking down for a while. Yelp is one of them. But that was a good short last year, and it looks like it's still having problems. So it's just continually broken down. And everybody's been talking about buying them, similar to Twitter, which busted apart and broke out of this bear flag finally on earnings. Of course, it takes earnings to do that, and it's very difficult to short the stock in here, mainly because if you're sitting there, you're getting all these rumors about the stock being bought out, and they come and go, and they generally tend to be a bunch of baloney. And I think the last one is probably the most hilarious. Somebody put up a false website trying to look like Bloomberg, and Bloomberg had to come out and say that it was not them, it wasn't a real website, and that I think I was here, gave it up here. And you can see the day before the stock's trying to rally before earnings, and it blows apart. I've been saying if anybody wants to buy Twitter, just wait, and I think you get it for 20 bucks or less if you're patient. Other names that I've been looking at on the short side, Biogen, and this is one to keep an eye on, I think, because you have this gap down. And you could, we've talked about this one for a long time, because on the weekly chart, let's see if I can find it right here. You start getting all these charts overlaying on this, and it's tough to figure out where things are. But I've talked about sort of pinhead and shoulders sort of formation here. And finally, now you get the breakdown. And now what you have is a situation where you have this could have been treated as a shortable gap down. You would have gotten some points out of it, and now you're forming a bear flag. So I tend to think it's shortable at the peak here. 327 is the high here on the shortable gap down day. So rallies up into that level, you can test them, and you want to use a stop somewhere around that high and keep things tight. Because I think in this market, you just don't know what's going to happen, and things can turn on you very quickly. And it's just a very strange market. So let's go take a look at some of these stocks like this Infineon. It's done okay. And you notice it pulls into the 10-day moving average on very light volume. There's a breakout, I think, on earnings, and of course your chance to buy is there on the pullback. Netflix also, same thing here. You had a pullback, and if you're paying attention, you see the Voodoo pullback into the 20-day moving average right here. So it drops through the 10-day, and then we jacked today, and we had a nice move on it. That's actually quite tradable for anybody who was paying attention. You got about 5 or 6 points on that thing. Amazon is trying to hold its Bible gap up, but my theory here is that it's actually very weak because on the gap up day it closed at the lows and gave up half of its gains. Now you've undercut the lows of that Bible gap up day, the intraday low there, which I think is what 529.35, and today you rallied back up because the market was up, I believe, and you're hanging in there. So it's sitting in there. I wonder if it's going to come off. I know Google has given up the ghost on its Bible gap up, which was here, and it failed within 4 days. So that's broken down. Now it's on a little bear flag, and I got to wonder if it's not shortable here, or maybe on a rally up into the 10-day using the low here, which is 678 as your stop. And I know that's 14 points away, but the reality is it's only about a couple of percent or so away from where it's trading right now. So you could even short it here, use that as your stop. It's only about 2 to 3%. So nothing really, nothing that I would call high risk, say, if you wanted to try that one. Tesla coming out with earnings next Thursday, I believe. And you can see here, you've been breaking down. You have a couple of moves into new high ground. Well, not new high ground, but higher highs, because the left side of the pattern, I think you're very close. If the all-time high was here, let's check this out. High is 291.42, and over on this side, you get as high as 286.65. So close. But for all you know, you get this. You may have like a big sort of pod formation starting to break down. Notice that these last 2 weeks ago and the week before, you had higher weekly volume on the downside on the reversals. So earnings come out next week. That's probably going to be the decisive catalyst for where the stock goes from here, and it could set up as some sort of a pod-like pattern, or just a big ugly cup. And you often see tops occur where you have one big cup and then another bigger cup, and it's just kind of getting tired. But we'll see what happens. I think this is still kind of an open question right now. Mobileye has been hanging in there very nicely, but if you look at this on a weekly, you're straight down, straight up. What does it look like? Almost like a pod, punchbowl of death, broken up to new highs, and that's all-time highs here. So that's a breakout. And on the daily chart, it's actually looking okay. You came down into the 20-day, and the volume is drying up here. You could have bought there, but notice how it rallies up into the 10-day and runs out of gas and stalls out today on a higher volume, increasing volume. Not above average, but it's below average, but still increasing volume, so it tells you that people are selling into it. I think earnings don't come out until September, so there's really nothing to worry about in terms of earnings coming out and having to play earnings roulette. But I'm not so sure this thing is going to go anywhere over the next month. Fortinet is hanging in there, but I think some of the you have the Bible gap up, and you got 5 days of the bear flag now, but it's not really going anywhere, which is kind of typical for the Bible gap ups in Fortinet. But I think that the cyber security group may have some problems, because FireEye after hours is down somewhere around 43, down in here below this 45 level, so it's breaking down below these lows. You have CyberArk has been trying to hang in here. It's underneath all the bigger moving averages of 50 and the 65-day exponential, so there's the space between those is my zone. But you notice how this thing breaks down here, and again, in this case, it doesn't really even rally up to the 20-day moving average. It just tries to break out and it fails, and of course it's a cup with handle, long handle, and you have one failed breakout here and then another failed breakout here. And as this breaks down, you notice it breaks down through the 50-day, then one rally up into the 50-day. You could have shorted it there, boom, it breaks down. And again, you see how these are more tactical than thematic. In other words, you get 3 or 4 days of downside, you pick off some points, as Livermore would say, and then you go away and you go count your money, and you're happy waiting for the next rally. So you get another one here, and you rally up into the 50-day, and you break down, kaboom. And now volume is drying up along the 10-day, but I imagine this is coming down tomorrow. Palo Alto Networks going to new highs, and now you're breaking down, trying to hold on top of this little cup structure here and holding along the 20-day, but that's probably going to be down tomorrow. Been watching Celgene. The biotechs, some of the biotechs were getting creamed on Monday, and they've been getting creamed, a lot of them recently. You see it bounce off the 20-day moving average, but it's starting to fail on the viable gap up. It got back above the low today, so trying to hang in there. So that's, it's kind of in no man's land right now. If you bought it off the 20-day, you picked up a few points, and I'm not sure where it goes from here. This is what it looks like on a weekly chart. Not really anything too definitive, just a breakout, and now it's pulling back. But we know what happens to breakouts in this market. CRM, Salesforce, holding along the 50-day moving average. Notice here, I think the pocket pivot somewhere in here. I think it was this day right here. So it would have been right here. And it's holding along the 50-day moving average and just sitting there. I think earnings come out later in August. But nothing really exciting there. I guess you could try and buy it off the 50-day and trade it over and over again every time it comes into the 50-day, buy it there and then sell it up a buck or two, and do that over and over again. I guess you can retire someday. Let me see if I can look at some of my other lists that I have on this screen. I'm going to move this over. I'm going to move all these over here. And we're going to move this over here and get him out of the way. So we'll look at some of this, like Shop, for example. There's a weekly chart. We went the daily. Okay, a Bible gap up, but notice how it stalls out and closed near the lower half of the daily trading range. So it was sort of setting up here. There was a pocket pivot right here, so you had a bottom fishing pocket pivot. If you had bought it, you could have picked up a buck or two. I guess it's moving higher. I don't know if that's enough to sit through earnings and play earnings roulette with the stock, but if you did, you'd be very happy today. But if you bought the Bible gap up today, it's kind of stalling. I'm not sure, what it's going to do from here. I think I would like to see it move sideways and maybe drift downward a little bit and see volume dry up. That might set up a buy, a low risk buy point or entry point as it forms a handle. So you get a cup with a handle, and it'd only be the second base. But on the other hand, this could be an IPO pod for all you know, because it is a pretty sharp drop, and then you get a big rally back to the upside. And on a weekly chart, it looks like that. Okay, so that's not really what I would call your constructive cup formation on a weekly. It almost looks like a punch bowl of death. But it's only about, I think, what, 20, 25, 30% deep, maybe a little more. But still, it's straight down, straight up, and that's generally not sustainable when you see that. So I'd be watching out for that. I was watching Solar City because you had a pocket pivot in the stock, I guess, here today. No, that's the weekly chart. Whoop. Yesterday it was. Yeah, there we go. There's a pocket pivot yesterday, and another one today. And this seems to be turning. It's trying to turn. So something to keep an eye on if you had a pullback on the weekly chart. It's trying to come out of this ugly base, but it's kind of unclear as to what that's going to do. Eyes holding very tight. Earnings coming out soon in a couple of weeks or next week, I think, and holding very tight along the 50-day. You see all the moving averages all kind of coming together in a confluence and providing support for the stock. So I'm just going through the things that I'm keeping on. Exxon and Trexon bounced in midair and then turned back above the 10-day moving average for a pocket pivot. But you can notice how you could have bought it on the pullback into the top of the base after the breakout. So it breaks out, fails, but it comes into the top of the base and bleeds a little bit into the base, bounces off the 50-day moving average. Notice how a 65-day exponential comes in and starts running right along with the 50-day, and then thing comes off of there. And if you're looking at this, you see the voodoo type action. Could have been bought, but it's tough to buy some of these things because usually at the time that it's happening, the market's eating dog do, so makes it a tough proposition at best. GoDaddy coming out with earnings next week. Get a pocket pivot 2 days ago, and bottom fishing pocket. It's trying to round out. Maybe it runs higher, maybe it just runs into the 58 and then dies. But I think earnings are going to be the big catalyst there. Solar Edge, with Solar City coming up, and you know Vivint Solar got bought out by Sun Edison. I'm wondering what this is going to do. This is rally up into the 20-day on weak volume, so it's really not clear to me on this one, but I'd keep an eye on it. Maybe something happens that makes it viable. And if Solar City is turning, it's all related to residential solar. And Solar Edge, with its power inverters, I guess, solar inverters, is in bed with all these residential solar companies like Solar City, I think, Vivint, and so on. So am I trying to turn? You've come all the way back to the top of this sort of, I don't know what you call this, not really a base at all, but you've come all the way back to this gap. And double bottom, I think it just barely undercuts that low, and now it's trying to come up, but it's really in an unclear position. Acuity Brands, this stock's acted pretty well. Bounced up the 20-day on light, below average volume, not necessarily lighter volume, but below average, and that's been acting pretty well. They're sort of the hot new Cree type stock. Let's take a look at a couple of the other ones here. That one's dying. You see that Zyop is trying to hang in there along the 10-day and the 20-day moving average. Looked at GoPro. Bob is death warmed over here. And that's the weekly chart. You get the daily. I mean, that's just garbage. Go, that's just garbage as well. Remember last week I pointed out, somebody was asking me, telling me that this is a voodoo action at the 10-day moving average, and a little disconcerting to me because it tells me that they don't really get it, and you know, I guess that's just a matter of more study of what a voodoo pullback looks like. That is not a voodoo pullback. That's what you'd call a wedging rally into the 10-day moving average, and then it fails. So someone thinks that just because something's above the 10-day moving average and volume has dried up in the extreme, that's a voodoo pullback. No, that is a wedging rally, and you would rather see something drifting downward after constructive action, drifting downward into the 10-day rather than this big break, and now you're getting drifting upward on light volume. That's wedging. So a big difference there, and need to learn to identify that. Let's see. These are just the things I've been keeping an eye on. I got that Shack Attack. Came out with earnings, I guess. It looked like it was going higher. You had a pocket pivot yesterday, but nothing really happening there. It's deep in its pattern. I'm not going to play with this. Like I said, you wonder how anybody can lose money selling hamburgers and shakes, but that's what they seem to be doing. So, and that's your pattern on the weekly chart. So that's nothing really to get excited about. Let's see what we got over here. Data. Oh, that was exciting. Look at that. Earnings came out, just blew to pieces. And did close up at the peak of the range, though. Somebody likes it. I've heard some rumors that Microsoft might buy them. There's also been rumors that Microsoft is going to buy Salesforce, but you don't see that happening. And the stock is kind of drifting around. Looked like a short this morning, up around the high here, which is 114.19, and it got up as high as 111.89. Heavy volume, heavy selling. Maybe it retests the 10-day. Kind of in no man's land right now, but it's pretty ugly looking, and it just shows what can happen when you play earnings roulette. You know, maybe you get lucky and the thing gaps up, or maybe you get a schizoid type move like we saw on LinkedIn after the close today. I imagine by the time most of you view this video, it will be tomorrow morning, because probably those of you on the East Coast, if you have any sense whatsoever, you're probably in bed already. And on the West Coast, maybe you're just about going to bed. In any case, it's only 5:15 here, and my dinner reservation is at 6 p.m. So I'll be up for a while, but I will be up at 3. I guess I'm fortunate that I really only need 5 to 6 hours of sleep a night. Let's see, I'm going to look around here, see if I see anything that just kind of rings a bell for me. I'd have to say that overall it's really dicey and it's really sketchy. You know, you get, speaking of sketchy, you get Skechers, and there's a viable gap up, but this is probably the one to buy, and it hasn't had a great move, but it's slow and steady, but it's working. Notice how you get see a lot of volume there. I think that was a Russell rebalancing or something. And another Bible gap up, but I don't think I'd be buying it unless you picked it off near 140 and it's continued higher. But it looks to me like it might be somewhat extended. Zebra Technologies, that one gave up the ghost, violating the 50-day, and it did get a pocket pivot off the 50-day about 3 weeks ago, and nice rally. That was a playable trade, but that's about it. And now you roll over and you're breaking down, heading back towards the range of the Bible gap up back in about mid-May. And now this thing is stuck underneath both the 50-day and the 65-day. So it's pretty weak. I don't know if it rallies on earnings or something, and maybe up into the 50-day. Maybe that becomes a short. Let's see. Retrofin. I thought this was trying to act okay, but again, here's a breakout, okay, and the breakout fails. And it's now underneath the 50-day. I don't know if it's going to bounce on earnings or what, but it's another stock, it was acting well, but now it's just kind of lost. Sort of a lost child. Here's Splunk. Splunk, I'm thinking, is a short. Breakdown, you have a breakout attempt, you break down, now you busted through the 50-day. Notice how you went through, you rallied back into the 20-day, just one day, and then you gap down again. Another pattern that was looking good and it's ugly. Ulta Salons is hanging in there along the 20-day moving average as volume dries up. Under Armour, Bible gap up has continued higher. That's constructive, but notice that the volume is starting to diminish. So believe it or not, I'm wondering if this might become a short as you move higher and volume diminishes here, it dries up, so it's sort of wedging to new highs. And I think it's a clear sign, unless you were to see volume pick up, clear sign that demand for the stock is waning, and that may be a problem. So Vasco Data, cybersecurity name that just blew apart. But again, here we have your your handy dandy IBD breakout, which fails rather quickly, and again, you bust to the 50-day, you bounce up to the 20-day, you bust through the 50-day, you bounce up back up to the 20-day, and that's pretty much all she wrote. Now you're gapping down to the downside, and you've got this big, ugly, improper double bottom, I suppose, but it's a failed breakout, and good night, Irene. Let's see, another one. This one was one looking, another failed breakout. So you see a lot of this stuff all over the place. And I have to say, it concerns me that nothing is really holding up. You're not seeing many breakouts. Or, yeah, Facebook is working and it's still holding its breakout. Maybe it goes to 100 one more time and then it tops. I don't know. I actually own a little bit of it right now, and we'll see what happens tomorrow. But I did okay, well enough to take some profits in other things that I can wait and see what happens. Ambarella I should probably look at here. Is it a climax top or is it not? Only its hairdresser knows for sure, and I guess it wasn't because you moved back up to the highs. But we had the pocket pivot, which we sent out an alert on. And it moved back up to the highs, made a marginal new high, and then it's failing here. But notice you're drawing up pretty sharply with no volume. I'm on a tiny position in this right now. We'll see if it turns back to the upside. That's what I'm banking on. If it goes below this low here of 115.50, I'm probably just going to be gone. No, I'm sorry, 114.50. And that's it. So I'd ask for any questions, but nobody's on this right now. I'm just recording this. And I don't really see anything else here that I think is all that good. Maybe I should take a look at one last thing here, if I can get to it. Some of the stocks on my short list. Baidu. Okay, this was a gap down massively on earnings. Look at that. Again, earnings are let loser. And it's rallying back up. So somewhere right now it's in no man's land. It's gone above the high, the intraday high of the shortable gap up, or gap down day rather. And maybe it heads up to this 180 level where you get some resistance, overhead resistance at the lows at this point here. If it went through there, then I guess the next point would be along these lows here. And so I'm just watching this one as it rallies. Let's see, Intel has been a pretty ugly stock. You notice how on the way down, here's one that was trying to break out here, it failed, and it just goes right through the 50-day moving average, rallies back up to the 50-day moving average where it could have been shorted, and then we break down again. And notice how as it's going lower now, it's bumping into the 20-day moving average. See that? and probably did that again today and reversed and closed down on the day, and it's probably heading lower. Workday, it's probably something to keep an eye on. See how you rallied up. You had some good volume here, and you could say this was a pocket pivot coming up through the 50-day moving average. The only problem with this is that it is extended at that point. So that's not something I necessarily want to buy into. If you did, you get a couple more bucks out of it, but it runs out of gas here at the 200-day and volume dries up, and then we roll it over. Now it's rallying with the market, but notice how today was definitely a voodoo day on a definite wedging rally. So I'm wondering if it runs out of gas right here. I think earnings come out at the end of August, sometime or middle of August, I forget. And maybe it blows up at that point, or maybe it runs to the 200-day again. I think it may be testable on the short side on an intraday basis using the 620 chart, on the basis that you really have a weak wedging rally. But on the other hand, the breakdown off the 200-day, which was reasonably profitable, you could have taken about 4 or 5 points out of that one, didn't occur on a heavy volume either. It's not above average volume. It's below average, and it's relatively light, although it does pick up relative to the volume in here. So again, I think Workday is another one of these companies that, like CRM, like Salesforce, is being talked about as a buyout candidate, and blah, blah, blah. I tend to think with any of these companies that are buyout candidates and they sell at 100 or 150 or 200 times earnings, anybody who wants to buy them, all they have to do is sit around and wait, I think, and they'll get them a lot cheaper. So anyways, draw some conclusions here. You've got a lot of stocks breaking down. You've got a mixed bag in the indexes, but you have a context for a pullback in the New York Composite. So we saw that, rallying. It's rallied back up into the 200-day moving average. But you also have the context for the market setting up again with the S&P and the NASDAQ today testing their 50-day moving averages on the downside and then turning back up to the upside and successfully holding the 50-day moving averages. Meanwhile, the Russell 2000 has bounced off of its 200-day moving average, and it's very weak. But you can see the broad divergence between the bigger cap, narrow indexes like the NASDAQ, the S&P, the Dow, versus the broader indexes like the New York Composite and the Russell 2000. And I think that is an issue. And I'm not sure whether we just chop back and forth throughout the rest of August, say, as we get through summer, and we move into what are the more decisive, say, and critical months of September and October, when you usually see a lot of big moves in the market. And that may be the case. So if you're trying to trade this market, what are you looking at? You're looking at mostly short-term swing trades. Sometimes they're just day trades. Like Software Toolworks last week after earnings, that was good for about 8, 9, 10 points on the short side in one day. And that's the sort of thing I like to play, just jump on it very heavily, and you get the nice downside move. The only problem is you don't see that very often, and I thought we might get something like that with NXPI. We had that, like I was saying, okay, all of a sudden it doesn't want to give me any charts. That's e-signal for you. But in any case, we had Software Toolworks rally to the upside, and after earnings then reverse at the 50-day moving average. So why don't we do this? Maybe I can pull this guy up. Microsoft has this new thing, I guess you call it the blue circle of death, this little thing that sits and goes around and around. I'm not sure what's happening with this right now. Seems like everything's decided to freeze up. But in any case, today I looked at shorting NXPI. I thought maybe it'd be shortable, similar to the way Software Toolworks was last week. And that didn't pan out today. So, even on the short side, it's not like you're getting anything. Oh, look, here it comes. Here it comes. Took it a while. Uh-oh. Not again. There we go. Kind of want to shrink this a little bit, though. So, that thing, that was shortable on the earnings gap up, but NXPI holding up. And find some resistance. This hasn't updated yet, actually. So today we actually got up close to the 50-day. Anyways, everything's going to sleep on me now. It's been a long day here on the Big Island, so maybe my computer's tired too. I don't know. But in any case, you can see futures are down a little bit here at 8:26 Pacific time, 5:26 Hawaii time, and too late to think about on the East Coast. But in any case, that's kind of where we're at. So we'll see what happens, and maybe we'll do a live webinar on Monday when I'm back home, and Dr. K can be on. We can answer some questions, so save those up. And I may do another one of these over the weekend if there's any significant change in the market. But I think you're just in this chop and slop environment that is very tough to trade and somewhat frustrating, and mostly just kind of a quick draw McGraw type of market. You're in and out and just trying to scalp things, and that's about it. And that's not a market where you're going to make big money, because big money is only made generally in markets where you at least get some significant trends, even if they are, say, more of an intermediate nature of a few weeks, but that's still better than just a few days or a few hours. So in any case, that's all I've got, you guys. Good luck tomorrow, maybe today by the time you're watching this, and we'll see how this market shakes out. So take care and aloha.